All right, welcome everyone to this week's edition of Where Is Your Stop? In this last week, in the Hawking Perspective, we ended up seeing some news about how dividends have essentially gone down, and people have different companies have had to be adjusting, for reduced revenues and thus cutting, those dividends down. And so, just wanted to take a look at that today and kind of approach it from a different perspective, somewhat, and seeing, the difference on maybe something else that's better out there. And so, what I wanted to do is I pulled up something called the DVY, and that's the Select Dividend ETF. And what we can see is that absolutely, as these dividends have been cut, they've been, the index has been going down, obviously, even though the market has been going up and breaking to new highs. And so it's kind of an ominous sign of essentially market looking down upon and frowning upon essentially cutting those dividends, which is a common thing. But nonetheless, this is an index that has been in a massive uptrend for a while. Last signal for us was in around that beginning of October of 2011, end of October and beginning of November of 2011, and really we've just continued to march up ever from there, and so our stops are basically outside of the noise a little bit, but we can kind of see that this. The DVY is essentially deciding, hey, what do we want to do from here? But so what can we see? I mean, we can see this move from essentially 52 to around 75, a little bit above that. And so what we can see is we've had essentially close to a essentially a 25% run to the upside, which for a lot of people, hey, they look at that and they go, that's not too shabby. But maybe there's something better that's out there. What necessarily has the market put emphasis on? It's kind of like value and growth, right? They both go and extend at different times as the market favors one over the other. And so one of the things that I kind of wanted to highlight today was a different ETF called the PKW, and this is an index of the guys that are doing buybacks, and so this is kind of the new age version of the dividend in terms of how companies are dealing with that excess money, and then not being able to essentially deploy that capital on any type of thing that's going to allow further growth. And so for them, the best deployment of capital is in a buyback. And so once again, kind of the last signal that we had was around 2011, and after a gentle move up, and then once again, we did get stopped out in here, and then another signal, and then we've just completely run. This actually never closed below, and so we've just had this massive run up. And what I want to highlight is that the PKW has had over 100% return, whereas the DVY has had, essentially a 50% return. So obviously the market is really giving preference right now to those buybacks compared to those dividends, and that's obviously going to be a reference to to where interest rates are at and how people are dealing with yield right now. If you can't find yield, then you're going to want to find it in terms of how a corporation is dealing with that excess, and thus limiting the supply and increasing the demand. And so there's always something out there that that is doing better. And so always know where that stop is, but definitely know the regime and the market that you're in, and what the market is putting a preference to. This is why price, volume, and volatility absolutely matter in your decisions, even more so than what a theme could. All right, so here's to staying outside the noise. Here's the beating random. These are the kind of things that beat random. Look forward to talking with you next week.